Okay, so we're gonna look at our trade today in USD CAD for a 1.7R, and we have that closed right now in early Asia session. And I'd like to discuss why we got into this trade and the fundamentals and the technicals on why we considered going long on USD CAD. The current fundamentals are not really supporting a decisive long in this pair, in my opinion. More purely a technical entry. USD CAD making these higher highs and higher lows over the past few months. And if we look at the 4-hour time frame, we see that it has been moving in that bullish trend for quite some time now, ever since May, I would say. At times, it could go very impulsive and really push, and at times we see that the dips would be rather deep. So the character of USD CAD is a bit volatile, in my opinion. However, when you catch any of the long positions at the right time, then the behavior or tendency is that it continues to go higher in a rather short period of time. If we go to the 1-hour time frame, we see that there were two consecutive impulse legs up. We got this one right here and then this one right here. We see the momentum of price, and on that most previous move up, that impulse leg up, we see from that swing low to that swing high, we draw Fibonacci retracement, and in discount pricing it went down. There was not much liquidity present in that impulse leg below 0.5 fib, as you can see there. And so usually in those situations, the range low of that move becomes the liquidity. And so we see that price came up after that, sort of consolidated their accumulated orders, and then went down violently. And then finally, at around Monday, early Asia session, we see that this was, in my opinion, the fake out. And after that fake out, in early Asia session, went down and liquidated all those previous lows, as well as that low over there, which went into below 0.5 fib. And so we see that internal liquidation, that external liquidation, and finally we see that change of character. Now this one was a bit tricky. We see that in the 1-hour time frame, this one wicked above that previous fractal high over there, and then after that sort of went up, wicked that, and then went down. That for me is not a valid change of character. I would rather wait for a more decisive move up, because usually those kinds of when they wick those fractal highs or fractal lows, that for me can sometimes just be a liquidation, and then this could for example move lower and target liquidity lower in that impulse leg up. And so I waited for that. Instead, I waited for this one. Come end of London session, we see that move up, which is very timely. And for me, that was a good sign to get this. But fundamentally, again, I was still torn between either taking this trade at this time or not. We have representatives from both parties in Iran and in the US saying that the peace deal could definitely work out very well, and all parties are already in agreement with the peace deal. Again, we're still seeing that lack of proof, and the market is still manifesting that fear. We see that this was the more decisive breakout from that previous fractal high, and that was in late London session. After that, we go to the 15-minute time frame, and we see that there was a fair value gap that was left behind right over here, and so that fair value gap was mitigated over there, got in, and we see that there was a strong move up, then afterwards a move downwards. At around 1 hour after New York Open, we see that internal liquidation. After grabbing that internal liquidity, we see price moving up more aggressively, making those higher highs and higher lows, definitely changing order flow. And then finally, this morning, hitting our TP there for that 1.7R. Now, risk management wise, originally our stop loss was way lower than this, was over here, like right below that fair value gap in the 4-hour, but we moved it closer after it made that valid area of demand over here, and so we put our stop loss below here in order to manage that risk.